Hey everybody, welcome to our live earnings preview for Goldman Sachs. Now remember, we're going to do a couple of these today. First, we're going to talk about Goldman, and then we're going to talk about Netflix, because I just can't get enough of this stuff, and neither can you. So we're going to kick off right now with Goldman Sachs. Obviously, everybody knows who Goldman Sachs is. These guys are the Yankees of the financial service business. They're the biggest thing, the cream of the crop, the top. Great company. Of course, you know, they might be kind of like villains in some people's eyes, but, you know, I don't really care about that kind of negative view. It's Goldman Sachs, man. It's Goldman Sachs. So anyway, so we're going to take a look at a live earnings preview for them. We're going to check out what their price and consensus and earnings surprise chart looks like. We're going to take a look at their detailed earnings estimates coming up for this quarter. And then we're going to take a look at the live options chain and see if we can't find you guys a couple of ideas. So let's start how we always start. Let's dig in the charts here on Zacks.com on the price, consensus, and EPS surprise chart down here on the computer. Now, if you take a look at this, we've got the black line, which represents the price. That's associated with the right Y-axis. Then you see these multicolored lines. These multicolored lines represent our Zacks consensus estimate. Shows how it evolves over time and how the price moves along with it. Kind of funny how that works, huh? And then all these arrows, in the case of Goldman, most of them are green, but every once in a while you get a red arrow here. These are the actual EPS beats or misses. So the bigger green arrows are big beats. Smaller green arrows are little beats. And the red here, like I said, that was a big kind of disappointment there. But that's 2011. We're not worried about 2011. We're worried on the future here. But take a look at this. I mean, the Goldman came roaring back here throughout 2013, 2014, peaked in 2015. And if you notice, the earnings estimates kind of followed the same track. What happened in 2015 is it peaks? Well, these estimates started to creep back down here. So that's kind of what we're looking at. Still some decent growth numbers here coming from 2016 to 2017's numbers. So there's still some decent expectations for growth there. But overall, these numbers have continued to come down. So there's a little bit of worry there. Let's look at the last surprise, 4% surprise last quarter. The quarter before that, 23% surprise to the upside. Here's a little bit of a disappointment, a little small miss, but then beat. So they pretty, you know, on average, this is a company that's going to come out here and they're going to end up beating earnings. Now, remember, we've already had some banks, some big financials come out and announce their earnings, and they've been pretty good. I mean, JP Morgan had a decent quarter, right? So I'm thinking really that's just going to kind of go across the board in the financial services sector overall. So I'm actually looking for a little bit of sunshine here, I think, in the Goldman report. But also looking at this EPS price consensus and EPS surprise chart, just because Goldman beats doesn't necessarily mean that the stock is going to go up. If you look at what's happened, you know, a couple quarters ago, stock went down. Last quarter, stock went down. So I think it's about expectations for the future. Now, the other thing you got to worry about here with Goldman Sachs is the Brexit, right? There's this huge looming cloud of uncertainty surrounding the Brexit that we're not really sure how it's going to go. Is it really going to happen? Theresa May sure says so. And if it does happen, what are going to be the effects and who's going to be affected the most? I'm pretty sure Goldman has a shop in London. Are they going to have to move that? Are they going to change how they're doing business? It's something that's a little bit of an unknown out there that we're going to be thinking about. So, but in the meantime, we've had all this volatility surrounding the Brexit. And as a result, ended up being some great trading opportunities. And you know that Goldman loves to make money trading those stocks and commodities and futures and things like that. So it actually could be a little bit of a boost there. You know, to their bottom line, even heading into the Brexit. So that's something to watch for. Now let's go ahead and take a look back at the charts. Here on Zacks.com, we've got our detailed earnings estimates page. So here we can see the trend in more detail of our Zacks consensus estimate. And you can see 90 days ago, we were looking for $3.43 for this quarter, and now we're only talking about $3.01. Okay. Next quarter numbers have gone from 402, got a little boost up to 406, and then they dropped down to 373. That puts the current year down from 1455 to 1355. Next year's number is pretty healthy, though. They have come down from 1822 to 1740. Now, who caused this? Who did it? Look at these analysts here. Over the last 30 days, you have 6 analysts that have dropped their earnings estimates for the current quarter. 4 have done so for the next quarter. 6 for the current year. 5 for next year. Well, there's only a couple of brave souls on the opposite end of that spectrum. You got 2 analysts upping their earnings estimate for the current quarter over the last 60 days. 1 of them for the next quarter. Nobody taking a shot on the current year, and a single analyst increasing their estimates for next year. So all of this is coming together to give Goldman Sachs a Zacks rank number 3 hold right now. And if you take a look at our Zacks industry rank on this, it's in the bottom 10% of our Zacks industry rank. So what our industry rank does is it takes all of the stocks that are inside of this industry, compiles what their Zacks ranks are, and then as a whole, where does this industry rank amongst the 265 industries that we rank? So it's kind of in the bottom percentile here in terms of the Zacks industry rank. Something else to keep in mind. Now, let's go ahead and take a look at the options chain here on Goldman Sachs. So I'm going to take a live look at Yahoo Finance here, just because it's the easiest to kind of navigate for us. So I started the same way. Just look at the option that's going to expire here. It's July 22nd. So that's this Friday. I do the straddle view. That way you've got calls on the left side, puts on the right. So you look at the at-the-money put and call options. So let's bust out our fancy Windows calculator here. Let me pull it up here this way. There we go. So the at-the-money call right now is $2.80. So you go 280. The at-the-money put is 212. So plus the 212, right? So you get 492. And then you just go ahead and just divide that by, your stock price. So divided by 162.99. This gives you the implied move inside the options market. So a 3% move is what we're pricing in the options market for Goldman Sachs. Now, it's a big company, right? It's huge. It's a big bank-ish kind of thing. So a 3% move in the grand scheme of things really isn't much. I think our JP Morgan earnings report, we were talking about 2.7%, 2.6% was the move there that was implied. So 3%, just a little bit more than that. So I think what that means here is that these options really aren't pricing in a lot of juice here. So they're not expecting a huge move. So what I'm going to do is I'm going to go a little further out when I'm putting my options trade together. So let's go back to the chart here, or the options chain, rather. Let's go a little further out. So we've got this one report, right? The next report is going to be in October. But what we're trying to do is catch this earnings drift, this post-earnings drift from now up until October. So a lot of that reaction is going to happen right away. So let's look at the August options chain for us here. So we go a little further out. And what you notice is there's a little bit more money in here, but don't let this fool you here. So the 165s are at $3 now on the call side. The 160s are $5.94, but part of that's the intrinsic value, right? Because the stock's at 163. So $3 of that $5.94 is essentially intrinsic value that's already in there. So the 294 represents the time value and the implied volatility, right? So if you're bullish here, you want to look and see, let's look at some of these volumes and some of these open interests here, right? So I've got open interest of 7,000 contracts on the 170s. I've got 2,300 contracts on the 160s, 67. So that's kind of where you, and then look at this, 155 had a lot of action there too. So that's what I want to look for. And then on the put side, Look at this, down at 140, we've got 3,500 contracts down there. There's a lot going on down there. 1,200 contracts, 1,700 at 155, okay? So a lot of the action seems to be tilted a little bit towards the bullish side here, if I'm just looking at this options chain here. So remember, I'm going to give you two trades. One, we're going to get a bullish trade. Two, we're going to get a bearish trade. And I'm going to go ahead and give you my opinion on which side of Goldman you should be taking into this. So I'm going to look at the 165, not 160. I like the 160, 170 call spread here. Doesn't seem like a bad idea. So Eric told me he wants me to start calculating these things out for you. And I think that's a great idea. So let's go ahead and do this. So you've got 594. I would be buying that call. Then I would be selling the 170 call for 158. Okay? So that would cost me right here $4.36 to put this trade on. Now, my upside potential is the difference in the strike prices. In this case, the 160 to the 170, that's 10, minus the cost of the call spread. So this is $4.36 is the cost of my call spread, right? So now you're talking $5.64 is your complete upside potential. Now, the thing about it is Goldman has to trade above $170 at expiration in order for you to get that entire amount. But on the flip side, that amount that I would be paying, my $4.36, just add that to the strike price of the call that you're long, and that's where my break even would be. So my break even on this trade would be 164.36. Now consider that this is a stock that's trading at 163 today. That's not much of a move for me to get back to break even. And a big part of that is because we're going, the 160 call instead of the 165. So you don't have to have as much of a huge move to the upside to end up profiting on this trade, right? But going from 163 to 170 doesn't seem like that fantastic of a move, especially when we're talking about that we're pricing in a 3% move on the earnings news. So let's go ahead and go back to that. So let's do 3%. The 0.03, that's 3%, right? Times 163, that's a $4.89 move. How much were we just paying for this call spread right now? $4.36. So it's basically baked in, right? That's the move that we're looking for to the upside if this thing hits is $4.89, right? So that takes the stock to 167.89, right? You would be in the green on, I would be in the green on a trade like this. So there's that. Now let's go ahead and take a look at the bearish side of the equation. If you are in fact not so bullish here on Goldman Sachs, if you think maybe the best is over here, and this could be starting to unwind. So let's see what these bets against it are. That's essentially what a put is, right? The put is you think that the stock is going to end up going down, right? So let's just do the same sort of trade, just flipped on its head. So instead of a bullish call spread, we'll do a bearish put spread. So we're going to buy the at the money put, essentially, well, a little bit in the money put, right? I'll buy this 165. It's going to cost me $4.95. Where's my calculator? There we go. So we'll do $4.95 is what I'm looking at. And again, I do like that there's activity all the way down here, but I'm not going to get too cute. I like that there's 1,700 contracts here traded at 155. That's the put I'd be looking to sell, I believe. So you got the $4.95 that I'm paying here minus the $1.48. Oh, well, there's 48. Sorry, I missed the one. This is 337. I used to know how to press buttons on a calculator, kids. All right, look, 495. That's why. It's not my fault, it's the mouse. 495 minus $1.48. There we go. Now you got it. $3.47 is what I could put this trade on for. And then the difference in the strike price is going from 165 to 155. That's a $10 difference. So my upside potential is the difference. Take $10 and subtract this value here. So I'll do something tricky. I'm just going to make that negative, and I'm going to add it to 10. And look at that, $6.53 is my upside potential. But this is the coolest part. Let's go ahead and subtract that. I mean, divide that by the 347, which is my original investment on this. So I got a potential for 188% return, just as long as Goldman Sachs trades below $155 at expiration. So that's what we've got going on here. You've got a situation where we've seen earnings continue to kind of come down on our Zacks consensus. And you got a situation where a couple of banks have reported, and maybe that's already been baked into this stock's price up here at 163. So moving out towards August on Goldman Sachs, my personal opinion on the short-term trade is that I would be looking to add that put spread that we were talking about. And the reason is the huge upside potential percentage-wise that I could be getting from that. We have a market that's trading basically at all-time highs, so I think there's some risk that this starts to unwind. So that could be a feather in my cap also. And I just like I like the risk versus reward here on this particular put spread here on Goldman Sachs. So thank you so much for chiming in and asking for a Goldman Sachs trade. That's great. Ask and you shall receive, my friend. So after this, remember, stay tuned. At 1:30, we're going to be talking about Netflix, and I'm going to do the same thing. I'm going to take a look at their price and consensus chart. I'm going to talk about some of the issues they may be facing. I'm going to give you some options plays, and we're going to go ahead and try and make some money. So thank you so much for chiming in the video comment section below. Make sure you comment again here today, and stay tuned at 1:30 because I'll be right back. See you guys in a bit.